That's nice. But thanks for being with us, everybody. Welcome, welcome, welcome. Nice to have you all here. And it is time to look at the charts and have a peek at what we are going to be tracking this week. Now, I'm going to talk about 4 pairs that I think need to be talked about because there's some really excellent levels and some really excellent things going on. But for group members, for those that actually have monthly memberships with me, we are going to talk about probably another 6 pairs, give or take, this week as well. But for kind of the big staple pairs, I guess you could say, we're going to cover right now for all of you guys. But again, for group members, we have another 4 to 6 to cover that we will discuss tomorrow morning during our U.S. trading session. And we have lots of charts coming and lots of things happening, so it's going to be really exciting. So very, very nice to see you all. Let's get started. Remember, if you would like to see a little bit more about how we trade day in, day out, you can get a free trial to the trade group at daytradersfx.com/join. And you can get a free 5-day trial, and you can just give us a test drive. It's like going to a car lot and driving the car before you buy it, except I won't hassle you at the end of it and try to get you to do something you don't want to do. Just get a free trial. If you like it, great. If you don't, great. Not great. I'll be very sad, but there's lots and lots of fun things we do here, and we'd love to have you get a trial, so you can do that right there. Okay, the other thing that I look at that we always have to discuss is any important news items this week, and we've got some of those. As far as coming up stuff goes, RBA, central bank in Australia, we have some talkings coming out of that area Tuesday morning, bright and early, right around the London Open time, just after the London Open. That should be pretty interesting. So we'll see how that goes. And then we have just kind of a little bit of random news. There's a lot of it, but it's stuff that isn't typically huge movement news on Tuesday. But there's enough of it that we should see the markets actually do something. Wednesday we have Carney speaking as well. As well. We got some manufacturing numbers out of the UK. We have the ADP numbers from the US. And New Zealand, this is their dairy price index report. And this thing gets the New Zealand dollar moving like a son of a gun. I don't know why it does. And they never tell us what time it's going to be either. So we just know that it's going to happen. And it makes the New Zealand dollar move a lot. So that's coming. Trade balance for Australia is coming. Thursday, oh, I didn't even notice this. I was looking at this and it just didn't register with me because we have a bank holiday coming up. It's actually Saturday. Independence Day for the U.S. is on Saturday. I guess they're moving U.S. employment numbers up a day. So on Thursday, we'll have Draghi speaking and we'll have non-farm payroll in the U.S. So we'll be looking for that. We'll have a live session there, as always, and we'll see how that goes. So there's enough news this week that things should be exciting. And then we have Independence Day in the U.S. this weekend, and I will be doing something very independent. I don't know what it is, but I'll tell you the stories afterwards. So that's what's going on. Okay, so who's watching the Greek situation unfold? It's a pretty interesting one. This is kind of essentially, this is kind of what I expected to happen, minus quite as fast of a comeback as we saw. But I figured we were going to get a bit of a gap up, or a gap down, excuse me, just some sort of gap as the market opened. I figured Greece would either say, we've got a deal and this was going to shoot up 200 pips, or they weren't going to have a deal and it was going to shoot down some chunk. And so option B happened. And of course, it doesn't matter. I'm not trying to be right here or anything, but this is kind of what we're expecting. This is what we're seeing happen. Yes, Jan, exactly. Who isn't watching this madness just happen? So we saw the euro dollar gap down a little over 200 pips, and it opened about 200 pips lower than it closed on Friday. So we had this nice big empty space here. A little bit of a surprise was how fast it came back. So from the very low to the very high, we have about 325 pips on the euro dollar. Switzerland, the Swiss National Bank was buying up some euros to kind of help the exchange rate with the euro Swiss franc, keep that favorable for the Swiss. That was definitely a little bit of a factor there. Plus, we saw, we're just seeing all kinds of news out of Greece, whether there's going to be a vote on certain things, whether there's a deal or not, whether there's going to be the Grexit, as they say, or the exit of Greece from the European Union. It's just all of this craziness, and so all that we have to look at is, I promise you guys, we have quite a setup here. It's going to be a choppy, messy disaster of a setup, but it's going to play out. We have quite a setup here. I will not stop being long bias on the euro dollar until it hits 115. I just can't. I can't go against what I know is absolutely going to happen at one point or another. So I'm still targeting at least 115 on the euro dollar. I'm targeting 115. We've got to hit that 200 moving average. Once we get up there, it could pick up and go crazy and just head straight up from there. But I think 115 is kind of our minimal area to go for. Now, as you guys know, I have talked about this 110.50 a lot and said I want to be long above or short below. Well, we didn't really get much of an opportunity to do anything because the market opened below 110.50 by a pretty good little chunk. It opened right at that 110 area and went down, another 50 pips before coming back up. So this was the channel we were watching going into the weekend, 112.35 and 111.35. We didn't get a chance to do anything with either of these levels. These are major levels. This was a breakout level to short, and that was a breakout level to short, and it just opened right below both of those. So there wasn't much we could do, and then we saw this big comeback, and here everything is heading right back up again. So basically what I want to do with the euro dollar is I still want to buy dips. It sounds crazy, but it probably is actually. I just want to get these dips. I just want to get a piece of this action here. The euro is just bouncing up this trend line, and it's just making its way up into this general vicinity. And I'm telling you, I just can't stop thinking about the euro dollar reaching 11500. Now, I might even be cloudy minded about the whole thing, but we have quite the setup here that's going to put up a lot of fight, but it's going to play out and it's going to get there. That's number one. Number two is the euro dollar is holding very nicely. This high to this low, this big drop here, we have cleared the 23% fib several times. The 38% fib is up here at 1,1800. This trade, so to speak, has been activated. When we get closes beyond the 23% fib, our likelihood of making it to the 38% fib is so high that it's just not worth even messing with trying to trade it in the other direction. Now, there's going to be some short-term trades. That's a weekly chart. That's a big time frame. There's going to be some short-term opportunities to sell this and maybe get it back down to that 110 or 110.50 area. But I still just want to. I just want to buy dips. I just want to buy dips. Now, one thing that has changed a bit on the euro dollar is, and it basically spoke to us pretty loud and clear, is 110.50 was a really important level. 110.50 has changed a little bit, and it's now the 110 area, which I like better because that's a more round number, and that's kind of just a good psychological area that we can trade with. And so 110 is now kind of our make or break level on the euro dollar. Anything below 110, and we're looking for shorts, but we want to buy dips towards 110. The closer we get to 110, the better off we're going to be in the more opportunities. We're going to have to buy some dips there. Stops, we'd have our stops below about 109.50 area, but 110, as close to 110 as possible is going to be where we want to buy this euro dollar. So let's just look for those opportunities. The last thing we want to do is chase anything. The euro is up towards, it's right in the middle of this choppy channel. It's basically right where it closed. It's a little bit higher than where it closed for the weekend. It's a whole 45 pips higher than where it closed for the weekend, and it spent the whole week bouncing between this channel right here, and then it finally had a major break, and it's just right back into that channel again. So I'm just going to look for dips. I'm going to look for opportunities to buy into this pullback. 111.50 is a good area. 11100 is a good one, but anything, just remember that our kind of our big reversing point is 110. Even. So if we start getting below 110, we want to be out of this, out of any longs, and looking for opportunities to start shorting this euro dollar in case a big slide starts to happen. But so far, I still want to buy the dips on euro dollar, and I think that's going to be a great opportunity. Quick little reminder on EURCAD. We've seen some very similar situations happen on EURCAD. This thing was a little bit more severe. Remember, this was the level we were watching. This is 137.50. And again, it opened below 137.50 by about 200 pips, but then turned around and just ran right back up again. Remember, the EUROCAD has a massive inverse head and shoulders pattern that is still completely intact. So it did open below the neckline, which doesn't invalidate anything. It opened below the neckline, but then it very, very quickly ran right back up above that neckline. And that neckline's right around 137.50, and here we are at 139.13. So I still want to buy EUROCAD, and I still want to look for opportunities to buy the dip against 137.50. So 100 pips of pullback looks pretty good to me. And getting into this thing with stops below 137.50, stops probably around 137.00, and trading this up into the mid 140s. So that's what we're still looking for on this euro dollar. But remember, this starts getting below 137.00, and I don't know that we want to be in it anymore. Just like euro dollar starts getting below 110, 110. And we're starting to think twice about that. Below 109.50, we should be out of longs and be looking for opportunities to short it. And EUROCAD is that 137.50 is a good area to start looking for buying opportunities. And anything below 137.00 is just going to be too. That should be reversed, and it should be starting to head the other direction. So these are both going to be big movers and have some really, really good opportunities for some nice long-term trades. But this EUROCAD looks so good, and this thing is going to reach 145. Mark my words, it's just going to happen. So there's 600 potential pips and 700 and 800 pips if we can get a good 100 to 150 pip dip on this EUROCAD so that we can buy into that. So that's what I'm really excited about. Those are two of the euro pairs that I really want to do something with this week, and it should be very exciting. The Aussie dollar has been very interesting. Our level on the Aussie dollar is right about 75.50. I was looking at 7,600. We tested 7,600. We dipped just below 7,600 a little tiny bit. We're only at 76.78 right now. If we start breaking 75.50, then we need to not be short, or excuse me, not be long Aussie dollar. But if we start getting below that 75.50, let's start looking for opportunities to short this thing. It's in a nice falling wedge, and it's come off the top of the trend line, and it's done all of that stuff. But if it starts to break 75.50, then this could be looking to make new lows. We could have some sort of really interesting. I mean, this can't really be a head and shoulders pattern because it's in a move down. But you never know. This could turn out to be a very nice breakout and a very nice continuation down. But as long as it can hold on and maintain position above 75.50, I want to be long Aussie dollar. And I want to be long Aussie dollar up into the 23% fib here, which is around 80, the 80 level, and the 38% fib, which is up around 8,300. So I think we have some really, really good trades on both, well, on the Aussie dollar in particular, with this kind of a move there. So buying dips with stops below 75.50. Anything below 75.50, let's get short. Let's reverse our position. But for the moment, buying any kind of dips on this Aussie dollar should be pretty good. But the whole thing about trading is it's not whether we're right or wrong. It's not about any of that stuff. It's just find a good reason to do something, but know your exit strategy. For example, if I'm wrong about buying dips on Aussie dollar, but I get in at 7,600 because it retraces 78 pips from where it currently is, and then it hits 7,600, and then it runs through 75.50, then I have to risk 50 pips to find out that I'm wrong. But I only have to risk 50 pips, and I don't need to let it go too much further than that to find out that this is going the other direction. So again, it's not about being right or wrong. It's about just managing our situations, and our situation here will be we have some good things to look at, and some nice expected U.S. dollar weakness, at least correction that is not totally done yet. And so buying into the Aussie dollar dips should be good, but we want to get in as close to those major levels as possible so that we can find out if we're right or wrong as soon as possible with the least amount of risk. So that's what I'm looking for on the Aussie dollar. Pound dollar is still very good. The pound dollar got pretty choppy and sideways last week. Had a nice little run the early part of last week, and then it's just been totally sideways and choppy. The pound dollar's had a pretty nice little run over the last couple of weeks. It ran up about 750 pips. Now it's pulling back, and I'm just about 100% sure that the pound dollar is going to reach at least 156.50. Now, it made it down to about 55. That little low right there was 156.55. I think we're going to get one more stab to really dip below this. We may even get 15600. So I'm still looking for buying positions on the pound dollar between 15600 and 156.50, and I'm targeting at least 160 on this trade. And I think it's going to be a really nice little run. You can see that the pound dollar has kind of had this massive, we had that double bottom last year. And then 2 years ago, excuse me, and then it's just pushed through that just a little bit, but it's bouncing up like crazy. We have a nice inverse head and shoulders pattern that you can see right here, and this is just looking great. There's a nice, fantastic inverse head and shoulders pattern, and it seems to be holding on to this pretty well. Nice little neckline, gives us a price projection of 900 pips from 155. So I mean, that puts us potentially as high as 164, and we're gonna get there. We're gonna get there. The whole thing that that's definitely not what I want to do. The whole thing that we want to keep an eye on here is just keeping the long-term picture in mind here. With all this choppiness on the euro and pound and Aussie, what's the big picture? Right now, at least at this point, the big picture is getting the pound up into the low to mid 160s, getting the euro dollar up into 115 and even 118, getting EURCAD up into the mid 140s. These are the things, getting the Aussie dollar up above 80. These are the things that we're looking to have happen. And if we keep that big picture in mind, we're going to be able to make several hundred pips off each currency pair here on those moves up. So this is kind of the weekly outlook that we're covering, and there's so much more to talk about. There's some really excellent things happening on pound New Zealand, pound yen, New Zealand dollar, gold, and a few others, and those things will be talked about this week in the group with the paying members of the group. So if you'd like to see a little bit more on what we're going to trade on those, then definitely get a free trial at the link that I posted. But at least watch euro dollar, pound dollar, Aussie dollar, EURCAD this coming week, because those, 2 or 3 or all 4 of those pairs are going to just go nuts and give us some really, really big profits and some really big moves. So let's be ready for them. Let's jump in on them and go for it. And I will be sending charts out as the week goes on as well, and covering some of the things that we'll be expecting. So very good luck. I'll just give a little freebie here for anybody that is trading and or watching gold. Remember that basically our spot to watch for is if gold gets above 1205, chances are it's going to rally a lot. 1205, it's going to rally like crazy. So just keep that in mind. That's one thing I'm going to be looking for on gold. There's some sell side things to look for as well, but just watch that 1205. If 1205 breaks, gold is making a massive run up. Okay, guys, that's what I'm looking for. Like I said, there's a lot of other pairs, and we're going to cover those pairs as early as tomorrow morning and look for trading opportunities and all of those along with these currency pairs we just covered right now. But I hope everyone has a wonderful week trading. I hope you guys make a ton of money and you're super profitable and you just have a really, really great time. I am here for questions or comments about anything, so feel free to send them over, and we will cover, I'll answer any of your questions that you need. And thanks again for being with us. Have a wonderful rest of your Monday, and thanks again for spending a little bit of time with us this afternoon.